The money. Michael Wayne is the big boss at Medallion Financial Group, and we welcome you back to the show. Nice to have you with us, Michael.
No, Happy New Year, guys. Thanks for having me back.
Same to you, mate. Well, if you're inaccurate and hopeless, you wouldn't be here. But so just flip it over, and we must think you're not hopeless, and we must think you're okay. So, mate, what happened today? I was just explaining to Ed, that the bond market was a little bit spooky last night, and Wall Street didn't like it. But what happened here in Australia?
So basically our market finished off 51 points lower, or 0.85% lower. And basically, as you were pointing out, Treasuries in the US reached their highest levels since 2014. And Wall Street had its worst night since September of last year. Look, I think it's a bit early to get too nervous. We've got a big week coming up. We've got Janet Yellen's last rate decision meeting on Wednesday night, Australian time. We've got some inflation data here in Australia. We've got non-farm payrolls in the US on Friday. Not to mention, we've got 25% of the S&P 500's market cap reporting their earnings on Wednesday and Thursday nights, Australian time. So it's a big week.
So you're saying 1/4 of that massive index of 500 companies, they're going to come out over the next two days?
That's right. So Wednesday and Thursday. So it's a big period. So far, the earnings reports coming out of the US have been very strong. The lead up to the reporting season here in Australia has been fairly positive, with a number of companies coming out and upgrading their forecasts. So fingers crossed we can get through this period and then the markets can resume their upward trend.
Yeah, and that's what we really want, Michael, isn't it? If we had a choice between stock prices falling and rising, we like rising around here.
So we took a dip today. It kind of wipes out the gains of the last 3 or 4 days. Is that about it?
Yeah, certainly. I mean, the ASX has been underperforming for the year so far. Most international markets are up in the vicinity of 5 to 8% since the start of January. The ASX is basically flat or even slightly lower probably after today.
But it hasn't been helped by the fact that the Aussie dollar's gone up so strongly. Like, I don't think either you or me expected the currency to be so high. Michael, correct?
No, absolutely not. But obviously it's been a combination of things. The US dollar has been incredibly weak against the basket of currencies. Also, commodity prices have been very strong, and that's helped push up the likes of Rio Tinto, BHP, Fortescue Metals higher. But it's also had the effect of putting upward pressure on the terms of trade and the currency. And
the interesting thing is I had 2 bond experts on my program last night, and the summary of what they said was, the bond market yields or interest rates are starting to rise, but don't expect anything dramatic or scary this year. Michael, do you agree with them?
Yeah, look, absolutely. But also I think it's worth considering as well that it's not only the nominal rate that's important, but it's the real rate. So basically you've got to take into account inflation. If inflation expectations are increasing in line with the nominal yields or the headline yields that we sort of read about, then the real interest rates basically remaining flat. And I think that's the thing to keep a close eye on. If we get a situation where yields have been moving higher but inflation doesn't necessarily pick up, you'll get a situation where real interest rates move higher, and that's probably a bigger negative for equity markets and bond markets.
Okay. Now, we should explain equity markets is like an insider's term for stock markets. Remember, Michael, we've got normal people listening to us.
Sorry, apologies.
Okay. Now, next thing, when do you think the Reserve Bank will raise interest rates in Australia? Because that's an issue a lot of my listeners care about.
Yeah, look, I think towards maybe the end of the year it's looking like at this stage. I still am a little bit cautious on the housing market. If you see the housing prices continue to slide away slowly but surely, you get a negative wealth effect. People are less inclined to go out there and spend. And if you look at what's been driving spending of late, it's been people delving into their savings because obviously wages haven't been growing. So when house prices are moving higher, people feel more confident about delving into their savings. If the reverse continues to transpire and we start to see housing prices come off, people will be less inclined to delve into their savings, and therefore that will hurt consumer spending somewhat and might delay interest rates. So I think it ultimately depends on the direction of housing prices.
Yeah. Well, we've got Louis Christopher coming up, and Louis is a pretty good predictor of house prices, so we'll see what he's thinking. One last one. Like, it's all very well you coming on and giving us all this Ponzi numbers stuff, but my listeners want you to give us a stock that's going to do well this year, and don't be wrong, Michael. A really good stock that you're putting your reputation on.
Well, one that we had in our monthly report back in October was Speedcast Global, SDA. It's recently consolidated after a bit of a good run, and it's one that we think that will report very well this earnings season. Essentially, it's a telecommunications business that provides data access and internet access to companies that operate in very remote locations. So think about oil rigs, for instance, or shipping industry, or even leisure tourism.
Grey nomads.
grain nomads, that sort of thing. So basically these days everyone needs access to data and access to the internet even when they're operating in the most remote places. So SBA is certainly one to keep an eye on.
Has the share price really bullocked away, or is there still some rise left?
Oh, look, I think it's got some rise left. If you look at it over a 6-month basis, it's had a fairly good run. But if you look at it over a 3-year basis, it's really just done a big V-shaped recovery.
Yeah.
So the balance sheet's starting to look a lot better as they pay off their debt with increased cash flows. So I think that's certainly one to keep an eye on in a sector that's been under a lot of pressure in the last couple of years.
Yeah, it's an interesting name, isn't it? Speedcast. I reckon they've done some work with experts on what people want to hear. Speaker. Because like Telstra, you don't think Speedcast. Optus, don't think. It's like, where in the hell are they? So Speedcast is actually going to get you where you want to go when you're in remote areas.
Well, that's right. I think 9 out of the 10 largest energy companies globally use them for their offshore oil rigs. Yeah. Not to mention they've recently acquired a business that has things to do with the US military, which is always a good buzzword for people in markets. A lot of contracts to be won there.
Exactly the way Donald's carrying on. There could be a good need for a lot of communication. All right, mate. Thanks for joining us.
Not a problem. Have a good afternoon.
Nice to speak to you, Michael.